I want to talk about the Apple trade in particular today. It was very interesting, to say the least. The market gaps down and it goes up to fill the market on the 2-minute chart right here. As soon as it started to turn red on the, look like the fifth or fourth 2-minute candle, I put a short in and my stop loss was right above this candle. And this has been the technique that I want to get better at. Waiting for price to pull up high and getting close to an area that I can use as an area of risk. And so what I did here was I used the top of this as my risk. I noticed that this candle didn't even get any higher and it started to turn red. All right. Sometimes the candles go higher and then start to turn red. Just depends. That gives you a completely different stop loss risk. If the candle would have went up higher and put a pintail up here, then that would have been my area of risk, and I would have shorted as soon as it started turning red. In this case, it didn't go higher. It started turning red. And when I went in and it started to go in my favor, I immediately took my stop loss and started to break even. And what happened on this one is I trailed it all the way down and kept trailing it and kept trailing it until I got out at the bottom where the white dot is. And I want to get better at that kind of trading. The next trade I took on Apple was I like what's going on here because it looked like it was going to break down right here. This was red. And it went below that pivot. And remember, the day's a down day. The day is a bearish gap down. And although the 2-minute chart shows kind of like this reversal, that's what's to be expected when it goes up to get rid of some of those sellers and I'll get rid of some of the buyers. Buyers are trying to buy it back, but if it's really going to go down, you got to wait for the reversal. And I like what happened here on this particular trade because I waited for it to come up, back up, and that's when I shorted. And I want to try to get better at that. I want to try to get better at waiting for price to come up or reverse instead of trying it always on a breakdown situation. If I would have got in down here, it would have been a big loss. It didn't even give me enough room to drag my stop loss into break even, which is one of my best techniques. When price goes in my favor, I start lowering my stop loss and I put it on break even as fast as possible. That way I'm hardly ever losing anything. And if it runs like it did here on Apple, it's a great risk reward. Okay, so let's take a look at this. It went all the way. It came back up. Price came back up. I said I'll short up here rather than shorting down here. And so on this red dot, I started shorting. My stop loss was above that previous candle's pivot, which is right about there, right about here, and it started going in my favor. Unfortunately, I did not drag my stop loss to break even. Well, I actually it looks like I did because this is where I got out. This white dot is a little bit profitable, but I call that break even. It didn't go down very much. It started turning red, and as soon as it started turning red on this pintail, it was red. As soon as it started turning red, I took my stop loss to under break even or even break even, and that's why you see the white dot so close to where I entered. All right. And then, of course, if I would have had it higher, it really would have hurt. In this case, I did the same thing. Now, what we're looking at on the 2-minute is a strong sell-off, a lower high, another strong sell-off, and this candle is a really good clue. It was a super green candle, and then it come right back down, and I said, I'm going to short. But I'm not going to short on the breakdown. I'm going to let it come back up. So you see this red dot right here. This is where I sold short. And my stop loss was somewhere in the middle of this candle, this spike. And so what happened was, it's quite possible that it had went up and turned green and then started coming down, and I shorted and it went up and just a little bit here and got green. I can't remember how that actually played out, but then it's sold off. And what I did was I took my stop, which was, I think it was probably the high of that candle. More than likely, for me, it was the high of this candle that I got in on. And as soon as it started turning red, I broke even. And as soon as it went down and closed on this candle, when it closed, I dropped to that. And each candle I scaled down, each candle I went down, each candle I went down. Now you look at my risk reward for a move like this, it's almost 10 to 1, which is an excellent, and right here, it's an excellent return. I went down to the next candle, and right here, it started to come up, and it even went green. And something happened here where I would have stopped out even lower, higher if I had waited on this candle. Because this candle put in a pintail like it did, I went ahead and closed it. All right, and getting back in, the place to get back in, it started doing this stuff here. I'm like, uh-oh, I don't even know if I wanted to trade it. And I don't think I did take another trade, even though there were some good opportunities. But I just wanted to show and study and memorize and get better at letting price come back to a better price and not always having to take the breakout or breakdown. AMD is another example of trying to catch the breakdown. My stop was on this first red dot. I shorted twice on this candle and barely broke. I broke even both times, and then I tried to catch this right here as it continued. And I put the candle was really low, and I put my stop right above this candle. And all three of these trades is probably break even or maybe a tiny loss. And it was just so choppy. And I do want to talk about this opportunity here. This is what I'm talking about when you do have an opportunity. This pintail right here would have been, I wouldn't have used that as my stop loss at the top of it, but when it started turning red right here, I would have wanted to get in right here underneath when it broke down, and I'd put my stop loss right here where this box is, right above that, and then look to scale, trail, probably would have gotten out down here somewhere. Especially if it turned green and started coming back up, I probably would have gotten out right there. Okay, here's another one I want to remember. When it comes back up into the 8 and puts in some kind of a pintail or something, this would have been an interesting place to try. If I were to get in right here underneath this red candle, my stop would have been up here. And after it went down like that, I would have taken my stop. I'm pretty sure I would have broke even on this trade because it would have come back and stopped me out. Another opportunity is right here when you see that it wants to go down, but and it starts to turn red again off the 8. The 8's going down, the 20's going down, the 50's going down. So any kind of a pullback off of the 8 or 20 is a good area. This one would have been successful because as soon as it starts turning red, I can short. It's a little riskier in my opinion right here where this box is and have my stop right up here. And as soon as it started going down, I would have trailed my stop. My little tiny risk, I would have moved it, my stop loss down until that was profitable. Here's an example of it failing, it looks like. Because if I were to try to short over here, if it depends on where I'm doing it at though. Like right here, if I use this green candle here and it starts to turn red, except it's in between these moving averages, it's not as good as when it prices all the way on one side of all three moving averages, the 8, 20, and 50 prices on all the side of all three of them. Now it's in the middle of some, and that's a little bit more tricky. Okay. Well, once price gets back up into where they all touch, and it starts reversing again, these are good examples of potential trades and sell-offs that I can use. The goal is to let it come back up. See, they're all going down again. Here they all cross again. So, but it's not doing a whole lot right now. It may give us another chance to short, but I just want to look at the potential. Now, interesting to use the tip tops of these candles rather than the breakdown areas for the entries. I want to get better at that. This whole area here is the entry area, especially if I got a bunch of wicks to the left that I can use as my stop loss on this green candle, especially right over here when it started to turn red. I would say right over here, if I had to pick, as soon as this candle started turning red, I would have used the top of that green candle as my stop loss right there. So you see my entry would be somewhere right here as it turns red. So there's my stop loss, there's my risk. As soon as it turns, goes positive down into this area, I take my stop and I go to break even. And then I keep trailing and trailing, and then I'm trailing that candle, then I'm trailing this candle, and I probably would have stopped out down here, which looks like, you know, a risk reward of 4 to 5 to 1, which is still good. Maybe at least 4 to 1 or 3 to 1. That's pretty good. So these are the kinds of trades that I want to get better at and look for when I'm trading. Okay, here on Boeing BA, this is a couple, 3 or 4 areas I want to talk about. It works best when price is on the side of all 3 moving averages, the 8, the 20, and the 50, and it stays on one side. If it's going up, it'd have to stay on the top side. Going down, it's on the bottom side. Sometimes it goes up to the 20, and that's pretty good. Sometimes it goes up to the 50. You can see setups, and that's pretty good. But it's just not as strong, and the probability is a little bit lower. Okay? A pullback like this where it goes over the top, but the moving averages don't cross, this is a good opportunity right here. I'll show you. This pintail, if it turns red, it's going down. I don't want to short on that breakdown necessarily right there. Price came back up, and then it ticks over, it starts going red again. So the thing most people would try to break down, try to sell it as it's breaking down. That's a good strategy for some people, and I use it a lot. But the strategy I'm talking about right now is where we let it come back up. This red candle here was a green candle, and it went up into the 8 moving average. And in this candle over here, when it touches the moving average, that's the perfect area to try to short. Because now I got the top of this candle here that turned green as my stop loss right there at the top of this candle right here that touched and was green. When it was green, that's a good area to either try it, because then you could use the previous candle as your stop loss, which is a very small range. But if I didn't use that candle here, when it's right over here, as soon as it starts to turn red here, we could try to get in on it. And there's other ways of doing it. You could do the breaking down below is also a reasonable area to do it. But what I'm talking about is waiting for price to pull back into the moving average and get closer to the top of a reward risk area, a stop loss area. Instead of having this much of a stop loss, I only have this much of a stop loss. Because if it keeps going up, then I can get out quicker. Okay, that's the whole point of this, is if it keeps going up, get out quicker. Now, here's an area right here that might not have worked very well, depending on when I did it. Because if this candle turned green, it jumped over, and at some point it started turning red. If I would have gotten short when it started turning red and put my stop loss at the top of this big green candle, then it would have came back up, as you can tell here, and stopped me out. However, if I'm looking for some kind of a breakdown down here, and I think it's going to break down, especially when this doji closes below the 8, I could use that as my stop loss and try to short somewhere in the breakdown at this point. It could. I probably would do it below that candle, below the doji though, instead of waiting for this doji. And I'm not even sure if this would have made any money, but that's not the point. The point is picking good entries. And not necessarily did every trade work out perfectly, but getting a strategy that seems to be reasonable. And I like this idea of waiting for price to come back instead of always having to take the breakdown. Like this area right here is interesting. If I would have saw this developing in real time, right here, let's take a look at it. If I would have saw it developing in real time, I would have been interested in waiting for price to come back up into something. Well, this is what happened on Apple. It's the same thing where that pintail went up and then it created this opportunity. But here, it's the same principle here too. I probably would have waited to see if it's going to close below all three moving averages, and it did here on this red candle and on this doji, and somehow using these areas right here to enter and then trailing it down as close as I possibly can. Yeah, I like that style. I hope it works.